I spent my entire academic career studying the Great Depression. The Depression may have started because of a stock market crash, but what hit the general economy was a disruption of credit. Average citizens unable to borrow money, to do anything, to buy a home, start a business, stock their shelves. Credit has the ability to build a modern economy, but lack of credit has the power to destroy it, swiftly and absolutely. If we do not act boldly and immediately, we will replay the Depression of the 1930s, only this time it will be far, far worse. We don't do this now, we won't have an economy on Monday.
If you haven't watched Too Big to Fail on HBO/HBO Max, I would recommend that you watch it because basically it's probably one of the best accounts for the 2008 financial crisis that there is, along with a few other movies such as The Big Short and Margin Call. If you can, I'd watch all three of them if you have access to them. But basically, just as you saw in that clip, what ultimately caused what we call the 2008 recession was high speculation in the housing market, passing homes off in packages, selling them as if they were just regular stocks when these homes were, in many cases, already underwater, missing equity out of the overall value of the homes, and so forth and so on. I'm not going to waste time rehashing the 2008 crisis. I understand it very well, but the bottom line is what we felt on the streets was the credit crisis. And as far as I'm concerned, what Congress is trying to propose right now is basically fiduciarily irresponsible. And what they're trying to do, and I knew this was coming, what they're trying to do is they're ultimately trying to loosen the reins and restrictions, which is the exact same thing that was done leading up to 2008. Between 2001 and 2008, the Federal Reserve under Alan Greenspan reduced interest rates. Guess what? Right now, we're sitting with interest rates lower than ever. In fact, I think a 30-year fixed mortgage right now is 2.77%. That's not good. VA loans are now offering 40-year mortgages in order to refinance people so that they don't have to lose their home. But it's obvious that a 40-year mortgage chances are that's never going to be paid off. What is happening right now is a logical consequence of a country that's built on debt and a country that is determined to do whatever it can to keep raising its credit card limit while simultaneously almost 30 trillion in debt and doing whatever it can in order to make sure that they never actually have to pay the bill in full. But ultimately, the bill is going to come and it's going to have to be paid in full. It can already be argued that we're in a global financial crisis right now. However, even if you want to be optimistic and say that we're not, it's obvious that a global financial crisis is coming. Whether you want to ignore the impending student loans that have to be repaid, or you want to ignore the rent forbearance crisis or the mortgage forbearance crisis, or the number of women who have lost their office jobs that are probably not going to return, or the number of men who've lost jobs that are probably not going to return and are going to be forced into service sector workforce. The bottom line is, as you can see here, there are numerous signs that you're in a global economic crisis, and just about every single one of them checks a box. Many banks need bailouts. Well, we're not really there. That was 2008. Rising unemployment, absolutely. Bankruptcy, absolutely. Banks have stopped lending to people based on the fact their credit sucks. Crisis of debt. Obviously, America's about $30 trillion in debt probably by the end of this year. Companies go bankrupt. Well, we know about that. GDP contraction. Absolutely. The only thing that makes it appear as if America's economy was doing any better was the fact that the government was printing money and handing that money out, and people were taking that money and spending it. Most people weren't even saving it. They were taking it and spending it. Companies stop investing. Well, most companies have decided to buy back their stock, and a lot of companies, the ones who have been able to weather the storm, aren't really putting much investment into. They're certainly not putting in investment into the infrastructure. They're only investing in themselves if they have to. And what else? Consumer spending dries up. Well, as you can see in the retail markets, every single time they release jobs numbers and show you how many jobs have been lost, there usually is a pullback in retail spending, and there's also a pullback in the stock market. So basically, these are the signs. Now, whether you want to look at America, or you want to look at Canada, or you want to look at just about any other country, whether it's the Philippines, I would say almost any country except China, however, because China is getting back on the horse, even though their stock market has taken significant hits. The bottom line is, it can be argued that right now we're in a global financial crisis. And now, in order to force people to start spending, they want to get rid of credit sounding scores. The alarm on this issue a while ago. And by a while ago, I mean a couple of months ago. So they're saying that right now, the Congress is talking about banning credit scores. Now, as you know, I did a show, in fact, yesterday with Michelle Markey, who's also interested in directing people towards better personal finance. And in our show, we talked about all of the aspects of credit card scoring, and we talked about how to improve your credit, some of the steps that you need to do. Unfortunately, what the Congress wants to do right now is they want to ban credit scores altogether. Why is that? Why would they want to get rid of credit scores? Now, keep in mind, there's not just one credit score. There's 3 credit scores: TransUnion, Experian, Equifax. And the reason why there's 3 is because that actually makes the system more fair. You have 3 different credit scorers with their own algorithms and their own methods of scoring, all of them taking a look at you from different angles, and they come up with scores that are not the same. And the reason why these scores are not the same is because they have different ways of scoring your credit behavior. As far as I'm concerned, this entire country's system is built on debt, and your job as an American citizen is to take on as much debt as you can without capsizing like a boat that's filled with water. Under fiduciarily responsible laws, the levels of student loan debt that we have right now, car loans, home loans, it wouldn't even be possible because they wouldn't be lending to people who are absolute credit risks. But now that they see that student loans, auto loans, and home loans are mostly underwater or so inflated that new buyers can't buy in, the government is trying to figure out, how do we get these motherfuckers to take out more debt? Now, I want to point you back to Alan Greenspan. When we had 9/11, Alan Greenspan figured when people are terrified and they're afraid, they hoard their money. So what are we going to do to get these people to go out there and start spending money? Oh, I know. We'll reduce the interest rates. And I want you to know, back in the 80s, the interest rate on my bank account was at 10%. Republic National Bank. I'll never forget it. They reduced the interest rates so that they could give out more credit and make it so more people would take out more debt. That's how the government gets you to spend money. They give you credit cards. That's what they do. They make it easy for an 18-year-old to take out $30,000 worth of credit cards. They make it easier for an older person to take out even more. Oh, go out there and buy that boat. Go out there and get a Lamborghini on lease for $2,700 a month. Have you noticed how many of these shitty Huracans you see out there? Oh, you know what? Oh, you want a Hellcat? Okay, go buy a Hellcat. Oh, wait a minute. You can't afford a Hellcat? Yeah, get one of these shitty Scat Packs over here. That's what they do. That's the trap. That's what they do. They lower the requirements. They pass out more credit. And then you go out and you put a noose around your neck filled with credit cards. And you say, you know what I think I'm going to do? I'm going to finance this Bugatti Veyron at 1% interest for the next 1,000 years. Yeah, that's exactly how it happens. So ultimately, the Congress, Biden, they know that the credit score is a barrier to you being able to take out more debt. They know that the vast majority of students in this country have so much student loan debt that they can't buy a house. They know that the vast majority of student loans are making it so that these kids can't even go out and buy a car. They know that there's medical bills that are making it so that these people are seen immediately by the bank, and it says, wait a minute, wait, you owe like $100,000 for your breast augmentation surgery or something, and we're not gonna just give you more credit because you really need to pay that money back first, Jennifer Lopez, or who else, or you Instagram picture taking cam ho. They're not just going to give out money because they know you're not going to pay it back. So what does the government do? The government says, you know what we'll do? We'll make it harder for them to know who's creditworthy and who's not. What we're going to do is we're going to eliminate the scores. It's the only logical decision to do when it's obvious that these people are credit risks. So you should read up, learn about Senate Bill 5010. You should learn about this because what do they do? What do they always do? This is the thing they always do. When white liberals want to get legislation passed, what they do is they put a black face on it. So immediately we start talking, and you can read this yourself. I'm not going to read this whole thing. Immediately they start talking, look at this. 1 in 5 black people have a credit score below 620. Well, I'm black, and I have a credit score of 850. That's interesting. Compared to 1 in 19 white people. A credit score helps lenders determine how likely you are to be able to repay a loan. So guess what? If they're looking at you and they know that, wait a minute. This motherfucker works at McDonald's. And he already spends a lot of money on Air Jordan sneakers. You know what? I don't think we should be extending this guy $30,000 worth of credit. You know why? Because he's probably a credit risk. That's the kind of talk that goes down on underwriting. What they don't do is look at that person and say, hey, you know what? He wants to buy a Bugatti Veyron so he can, stunt around his neighborhood. Let's give him that credit so he can buy that Bugatti. Oh, he can't get the Bugatti? Okay, give him a Lamborghini. Yeah, they don't do that because that's fiduciarily irresponsible. As I insist that it's fiduciarily irresponsible to try to eliminate credit card scores, regardless how it impacts you. If you want a better score, you need to improve your score. How do you do that? Well, I talked about it for 3 hours yesterday with Michelle, and we explained that you need to pay your bills on time. You need to only take out credit cards that you intend on using, that you have enough money to pay back your bill on time, and I pay mine before the bills due. But my thing is, what they're tracking is your behavior. If you have bad behavior, they shouldn't be giving you any credit at all. Would you lend, like for instance, would you lend that guy on the corner $1,000? Because he sees you in the morning, he's like, hey, listen, brother, I really need your help. I need $1,000. Would you lend him $1,000? You know who I'm talking about. No. You goddamn right you're not going to lend them $1,000. Why? Because you know you're not going to get it back. So what they assume is, you know what we'll do? We'll just lend them this money and we'll charge them a shitload of interest over a very long period of time. So that $1,000 is going to turn into $4,000 or $5,000. And this is how you end up with student loans that are in the $100,000 to $200,000 range, and they go unpaid. That's what happens. But I would appreciate it if white liberals would stop trying to put black faces on it. I would appreciate it if you'd stop talking about black people as this black gentleman over here, I mean, his credit score is a 620, and he can barely get insurance from Geico. Well, how about you point at me and say, this black guy over here did the fuck what he was supposed to do. He has a credit score of 850 and he's driving around in a goddamn supercharged monster car that he disobeys speed limits and blows past these goddamn Toyotas and these stupid Hondas and Nissans. And his insurance is also low because somehow he manages not to get into car accidents because he doesn't hit anybody because they're so far behind him because he's speeding that they're not able to catch up to him and cause him to get into an accident. How about you do a story about me? Since it's obvious that they don't teach anything of value anymore in the government-sanctioned schools, I think it's important for us to go back to the good old days where we had simple memes that were able to be understood by everybody, including children, including teenagers, including adults. If you give a fool enough rope, they're going to hang themselves. If you hand people credit who are credit unworthy and have proven that they are credit unworthy, they are going to hang themselves by taking out massive amounts of debt that they cannot pay back. They will pass that debt on to whoever they can pass it on. Co-signers, if they can pass it on to a co-signer, they'll pass it on to a co-signer. Their children, if they can pass it on to their children, they'll pass that debt on to their children. If they can pass it on to anybody else, such as taxpayers or people who are wealthy, they will take out whatever they can in order to live as lavishly as possible, as high on the hog as possible. When it comes time for that bill to be paid, they'll be nowhere to be found, because what they'll do is they'll hop, skip, and jump away, and you'll never hear from them again. We used to have debtor's prison, but apparently this system decided that instead of debtor's prison, what they were going to do is they were just going to put that debt around your neck for the rest of your natural life, and then they were going to attach themselves to anybody who was stupid enough to be near enough to you to have some of that debt put around their neck too. That is what we live with right now. Rest assured, you need to pay attention to what the Congress is doing, and you need to vote no against this. You need to vote no. You need to make sure your congressmen vote no. Your representatives that you elected, you need them to vote no. Because I guarantee you, if they do these little measures to feed the heroin addict of debtors, I guarantee you, you'll never be able to dig yourself out of the hole that they did for us. Guaranteed. And by us, I'm talking about responsible people who spend wisely, who save wisely, and use credit wisely. If you thought 2008 was bad, you ain't seen nothing yet.